In today's video, we're going to take a look at how large market catalysts like the Chinese trade negotiations, the Chinese tariff situation impacts our short-term trading decisions. If you're interested in how we make trading decisions based on major market catalysts, stick around. Before we get into today's topic about major market catalysts and how it's going to inform our trading decisions, I wanted to remind you that at tradingworkshop.com, you have the ability to sign up for our 2 free-hour workshop where I go over in detail our stock selection process, as well as 3 low-risk, high-reward trading setups we use on our prop desk in New York City. Okay, so recently the market's been very volatile. In fact, including today's action, we have now moved greater than 1% 8 out of the last 9 trading days. To give you an example how wild that is, normally during the course of a month, you might have 3 or 4 days where the intraday range is greater than 1% on the SPYs, when I'm talking about the market. So now we've got a good streak going. It was 4 out of 5 days last week and 4 for 4 this week. So 8 out of 9 days we've traded greater than 1% range. So there's a lot of price action going on. What we like to say is the market's in play. The reason this is important is we focus on our desk when stocks have a strong catalyst and makes them in play. The reason why we focus on stocks that have a catalyst and they're in play is when a stock has a particular catalyst, like when, let's say, Intel comes out with earnings, that's going to cause a lot of large market participant institutions to put money into Intel or to take money out of Intel. And so we have more volatility, expanding volatility. And every once in a while, there are market moving catalysts that make the market itself in play. And the reason we know the recent catalyst, the Chinese trade negotiation, the Chinese trade war put the market in play is we can see the expansion of the intraday ranges. And so I'm going to show you a few charts and kind of give you an idea of how to think about these things from a big picture perspective. So first chart we're going to look at is April, the SPY chart. What we know is in the month of April, the SPYs gapped up above 282 early April and then trended up to 290. And then in late April actually moved up to 295. So this was a pretty big move in the last month coming into May. And you could say the market was maybe looking for an excuse to pull back. Even in late April, we can see that big red candle there. We had touched around 295 intraday. There was a Fed meeting. We'd come off a few dollars. Then the next day we touched 290 and we moved back up to 294. So you can kind of see we moved up quite a bit. We'd shown a little weakness on the failure above 294 on the Fed day. There wasn't anything they particularly said that it was important, but we knew that we were a bit extended and perhaps we wanted to keep our eyes peeled if a negative catalyst came into the market and we took out that recent low of 290, maybe we could look for a deeper pullback. And that was kind of the mindset. I wanted to take a look at the chart on the SPYs, the 30-minute, and when the China news first came out. And so you can kind of see the 2 days before that, we had the sell-off on the Fed. We had run right back up, but we had a top. We knew like 294.5, 295 was our top. And then we had a negative catalyst, or what people thought was a certainly negative catalyst was things are going to hell into a handbasket in China. And we actually gapped down below 290. And so basically what we talked about in the morning meeting was things aren't good in China. We're gapping below 290. Let's see if we fail here. If we do, we'll look for a bigger pullback. And we actually rallied right back up to 293, which we kind of talked about had been our best case that day. And so people were like, all right, maybe not so bad. But in the after hours, I think Trump tweeted something or something happened. And right when the market closed, we came off from 293 to 290. And so we knew, all right, well, the next day, let's see if we make a lower high. And if we get below 290, maybe we'll start to look for a bigger pullback into the mid-280s. And so the next day, you can see we popped on the open back to 290.50, 290.80, something like that. And we came off pretty hard below 290, and we put our short caps on, and we focused on being short till the mid-280s. And so you can kind of see that we had this big run up. We showed some signs of weakness. We actually gapped down. People were ready to buy on the gap down. But by the next day, everybody who bought was out of the money, and we had this catalyst. And so at that point, we were thinking the market is going to have a deeper pullback. We know every few months the market pulls back 3 to 5% generally. In the case of 3 to 5% pullback, based on where the SPYs are now, it's about an $8 to a $12 pullback. And so we know we topped out 294, 295. So we're going to look for a pullback into the mid 280s, and then we'll see worst case scenario, maybe the lower 280s. And then over the next few days, it was like up, down, up, down. We had a strong reversal off of 283, closed really strong. The next day we gapped down. We took out the low. We came into 280. And I can tell you for myself, I was thinking 283, 282, that was worst case. We actually took that out, went lower to 280. I know some people were looking to come off to 280. But once we got down below 283 and we had come into 280, my thought process was maybe we'll get a positive catalyst, we'll put in a higher low, and then we'll kind of work our way back up to the resistance areas. And so I want you to look at what I circled here was after we bottomed at 280 was we gapped up the next morning. We had actually moved higher from 280 up to 285. The next day we gapped down, which was great because I was operating under the assumption that the bottom had already been put in the market. And what we talked about in the morning meeting was now we need a higher low. 280 was the low a couple of days ago. We had already rallied back up to 285. We were looking at around 281 and a half, 282. If we can get our higher low and we start moving up, then maybe we take out the high from the prior day, 285, and 287 was our next resistance. And the larger resistance above that from early May when we first came off below 290 was 289. 2 out of 3 days we failed at there. And you can see there was a catalyst around 10:15, no new auto tariffs for Europe. This was not a big deal in my view, but I feel like we had sold off a lot. The White House wanted to come out with something to get the market to think, well, we're not going to fight. We're fighting the trade war with China right now. Things aren't good. We might not get a deal, but we're not going to do new tariffs on Europe, which you would think, not new tariffs on Europe on cars. Was that really the market was down? No. But immediately we shot up from 282 to 283 and a half, and the market used that as an excuse to go higher. And so I think it's really important, if you think about this overall, which is the market gapped down to 290 on the China stuff. Then we rallied back up. The next morning we gapped to around 290 when we got below. Regardless of how bad the China news was, and I was talking to macro people saying, this is really bad, this is like worst case scenario, it's in the back of my mind that it's worst case scenario, but all I'm thinking is technically, we've run up a lot from 282 to 294, 295. We now have something that people are gonna be looking at, bigger funds, and if we get below 290, I'm gonna look for that 3 to 5% pullback. And once we've bottomed at 280, which is, that's about a 5% pullback in the market, when we start to move higher, if we have some sort of negative catalyst where we gap lower, I'm going to look for a higher low. And even if something comes out like this European car thing, and I don't think it's that big of a deal, I'm going to be thinking, what is the technical pattern? This is what the technical pattern is almost every time. The market sells off, it tries to rally, it fails, it makes a low, it holds. Either the next day it takes out the low and gets back above it, or the next day it gaps up like it did in this case to 282. We move higher, and then if we come in a little bit, I look for a higher low, and like I'm trading the technical pattern. But I'm paying attention, at 290, I'm paying attention for a failure at 290, and I'm paying attention when we bottomed at 280, can we make a higher low? And if something comes out, which I think is total bullshit, I don't care. If it's viewed as a positive catalyst once we've come down for 4 or 5 days. If it's viewed as a negative catalyst after we've run up for a month and we've already showed some weakness after the Fed meeting. It's the timing of the catalyst. Have we run up a lot? Do we get something negative, which gives people an excuse to get out? And what happens is once the market shows bottoming patterns and makes a higher low and a higher high, more people who are waiting to see that price confirmation will come in, and then the next day, which was today, they run over each other and they chased and chased and chased until we got up to 289, which was the May 8th and May 10th failure area, and that's where we failed today, and we came off a couple of dollars. And so you're looking for positive catalysts after we've come off 4 or 5 days in a row. You're looking for negative catalysts after we've run up a bit, and that's that's the key, as opposed to how good or how bad the catalyst it is itself. Because again, the China thing could be viewed very negatively. Initially, we rallied back up on that. Eventually, over the next 4 or 5 days, we came down to 280. Then the next day, 2 days later after the bottom, we had something which was a minor catalyst. The next day, we're right back up at 289. And it really was, how are people positioned? What are they looking for after these moves? So the price action and the patterns trumped overall. And so I guess that was really the point, the overall point of this video, is pay attention to catalysts, negative catalysts after you've run up a bunch, and pay attention to positive catalysts, whether they, you don't need to interpret them so much, whether they're, there's a big deal, but just enough to cause initial buying. And if that buying pressure holds, follow the direction.